Hello traders, this is Michael coming to you from Game Edge on Monday, June 9th with our pre-market morning strategy briefing session and pre-market prep. We're going to do this live so we can interact with anybody joining us on the voice chat. So if you have any questions, make sure you pop in and drop them in the chat box and I'll get to them as soon as possible. So at Game Edge, we always start with our three pillars. If you followed us for any amount of time: sentiment, structure, and trend. We're currently looking at our market trend model. This is based on the tick index. You can research that at your favorite investing website. But the quick takeaway of the tick index is it is buying versus selling within the overall market. As more buying occurs, our instantaneous bolded white CT will move to the upside. As more selling occurs, it will obviously move to the downside. We have a couple other indicators here on this chart that we like to look at. The first one is these shorter term moving averages. These basically are just overlaid on our chart to give us an overall trend, just like you would use shorter term price moving averages. And obviously, if the bolded CT is above those moving averages, then that's indicating obviously we're trending up. We do have some back testing and tag combos that are associated with these overall moves in this bolded CT that help us decide, obviously, if we're going to place some capital at risk. Then the other overlays we have here is what we call our colored ribbon. This is a longer look back period for positioning our money in longer term trend of the overall market. And if the red is above cyan, then obviously is indicating that more buying is occurring in the market than selling. And then obviously we look at the slopes of these lines also. And obviously these look to be sloping up from lower left to upper right with positive slopes. So as long as that is occurring, buying is continuing within the overall market. If these would start to flatten out or start moving to the downside or producing a negative slope, then obviously we'd move to a little bit more cautionary stance with our longer term positioning in the overall market. Up here we have a new highs versus new lows indicator, basically just a breadth indicator. If the red is obviously if the green is obviously trending up and above the red, then obviously more stocks are being accumulated or bought than being sold. And you see that here on the past week or a couple weeks. It continues to move to the upside and maintain that overall bullish look of more buying versus selling in the overall market. Our next overlay here, panel, is this cyan. This is a filtered cumulative tick. This is filtered by plus 1,000, minus 1,000 block orders. This is obviously larger institutions or larger market participants. And we like to see this staying above zero or moving to the upside. That would be indicating that larger market participants are continuing to buy in the overall market or accumulate positions. As you can see, the overall past week, it mostly has been above the zero line, obviously up to flat as we've seen significant consolidation. If you look at the price down here, which is our green SPX, we've really just been sideways to just slightly trending up within the overall past week. And obviously that correlates with what we've seen in this filtered cumulative tick. We did see one day towards the end of the evening, I think there was some news events come out where we did see some selling come in, but the next day it really wasn't responded with a significant amount of selling on Friday. So we'll continue to watch this day over day, but this does give us a nice indication of what larger market participants are doing within the overall market. And our last is just a bolded it's a cumulative tick. It is white here. It just needs to be above zero, indicating obviously buying versus selling is still occurring. So heading into today, we're kind of flat to slightly up with the overall instantaneous or intraday tick. So we'll continue to watch that. As you see, Friday was just a consolidation day. If you're bullish, you want to see this bolded CT really start to do what we call a linear up. That would be a 45-degree angle to the upside, indicating that there's urgency in buying of market participants. Or if it's to the downside, below all the moving averages and moving swiftly to the down with a negative slope, then obviously that would be indicating more selling occurring. So that would be how you would want to position your overall trading plan for the day. So again, we'll continue to watch this, but as of now, it's flat to up to bullish, at least on the intraday. And then the overall longer look back period is still a significant bullish uptrend within the overall market. Moving on to our SPXA, if you followed us again for any amount of time, you've seen we've posted significant content about separating the SPXA and the SPXP. A lot of other services do not separate this, but we prefer to separate this. The SPXA is obviously longer term contracts that turn over a little bit, are not turned over as fast, sorry. And this is larger institutional money that is positioning in the overall market. And we'd like to watch this just to see how the larger players, and this gives us kind of a 40,000 foot view. We call this basically our cruise ship or our tanker. Again, as I said, these are larger boats, as you want to use that analogy, and they don't turn as swiftly as what our SPXP does, as well as the 0DTE. So again, call dominated on SPXA. This is just indicating that there's call speculation and out of the money call speculation to the upside above spot price is indicated here by the yellow bar, and a significant amount of in the money calls below us spot price. Again, in the money calls below us can be a supportive type action with these positive net deltas as they continue to grow through time. And then we are talking about the next expiry, which is the 20th. So heading into that expiry a few weeks away, we are again call dominated above and below spot price. So this is a bullish stance, and any pullback in the overall market should be looked at as an opportunity as of now with this structure and positioning. One of the key things we like to look at, obviously, is the SPX options complex. That's the largest and most liquid, and that gives us an overall view of how market participants are positioning, and that's how we structure our trading plans. So again, call dominated above and below spot price. You can see 6,100 to the upside, significant amount of speculation there, as well as 6,150. This green dot indicates this is PGEX, so that's an area that we can watch to the upside to see if the structure continues to advance. If the PGX is continuing to advance to the upside, then that means that out of the money call speculation is continuing to increase. And then conversely, if we see that overall structure drop, as well as the index level, then obviously that would indicate that the out of the money call speculation is not advancing significantly to the upside. Then we have our transition level. It's just a level of reference where we like to stay above to be in a little bit more positive gamma call dominated environment. And then obviously referencing the net OI here is long calls via the green net OI and net delta. All right, moving on to the SPXP. These obviously what we call our speedboats. These contracts turn over much more rapidly. So we continue to watch these for intraday positioning as well as weekly positioning, depending on what type of trader you are. So over here to our overall legend, we're call dominated in the gamma condition. Again, obviously a confluence there, the SPXA and the SPXP. And you can see that by the green net deltas to the upside. That's out of the money call speculation, green net OI. And then to the downside, you see this significant amount of green net delta under spot price. So again, in the money calls below us. And then we have the JPM strikes here to the downside, just for points of reference. To the upside, obviously, we see PGEX at 6,100, but we see COI at 6,000 at the moment. That's the highest call open interest. So again, anything above 6,000 will continue to be supportive. And then we have our GEX and DEX transition. The white box is the GEX transition. The blue or cyan box is your DEX transition, delta transition. So again, we continue to want to have spot price above those to be a little bit more supportive in a more positive call dominated environment, gamma environment. Also, if we're within the overall transitions, that is not necessarily a bearish state. It's just indicating we could see a little bit more uncertainty and choppiness. And then if we get below the transitions, obviously we would lean a little bit more, not bearish, but this is just a little bit more weakness in the overall market as you move below those transition areas. And then you'd be looking for your downside areas of support type action. So that would be down towards this 5,900 or 5,905 area. Not anticipating any of that move at the moment. Obviously staying above transition will be important. And then continuing to see out of the money call speculation if you want to see price appreciation. Moving on to the XPXP GEX ratio. This is basically a put call ratio, but we add a time component, which is gamma to it. We've spoke about this the past week that we did see some dropping in the GEX ratio. This is just indicating that short dated call gamma is either leaving the complex via mechanical closing or via spot price moving down, taking some of those in the money calls to out of the money. Obviously, that would reduce the overall short-dated call gamma. We see this rising back up as of Friday. So again, this is still bullish. We're above that one level that we parity level that we continue to like to see, indicating that call speculators and their bulls are in control. Again, this is spot price sensitive also. So as we move to the upside, we'll capture a significant amount of more of that out of the money call gamma that becomes in the money, again changing the ratio. But as of now, this is bullish, and then it continues to show that call speculators and out of the money call speculators and market participants are in control of the overall price structure and sentiment. Moving on to the delta balance. So the delta balance basically is just a separation of the out of the money or in the money right-hand plane, left-hand plane, above and below spot price. We like to separate these to get an overall view of what is happening in each individual area above spot price and below spot price. And this can be an early warning indicator if out of the money call speculation is dropping, or out of the money call speculation is continuing, or vice versa. If we see out of the money put speculation come in, obviously that would be indicating that short-term weakness may be coming into the overall complex. So as of now, obviously the green line is our right-hand plane. It is moving back above zero. So again, out of the money call speculation is starting to come back in. Then the red is the left-hand plane that is in the money calls below spot price, again staying very steady. So that's indicating that there's no urgency or fear of the in the money call holders below spot price. So again, they are continuing to hold their positions. Again, will be supportive as time passes and we have that positive net delta and charm below us. And then the blue is the delta balance. This is just indicating the aggregate of both of these spots, or sorry, both of these planes. So again, the delta balance trending towards one or being pegged at one is a bullish, indicating that call speculators or bulls, however you want to look at it, are continuing to maintain their control of the overall market. All right, moving on to the SPXP 0DTE for today. Obviously, this is intraday or 0DTE contracts. We've obviously indicated here that there's likely a long IC, 3,000 contracts at the two levels, the leg above us and the leg below us. So those will be important levels for your trading plan as we head into today. Spot price staying above this transition will also be important. You'll notice that we have a GEX and DEX transition confluence, which basically is unambiguous for us, and that gives us a great if-then trading plan for today. So above transition, we would be more bullish for a move up towards this 60-15, 60-20 area. Quickly, you'll notice that this is what this yellow outline box is what we refer to as our drunken sailor range. This is basically just overall low exposure and uncertainty within the overall complex, and this can be a choppy type area. That these need to be very short-term trades, possibly with smaller position size. And then our if-thens are if we move above the top of the drunken sailor range, we would be long for a move up towards 60-20, and then up towards the upper IC leg. Most likely we would see some stalling into that overall overhead leg. If we move above that 60-40, 60-45, then we'd be looking for a move towards 60-60, and then obviously ultimately up towards the top of this out of the money call speculation area towards 60-80. One of the keys that we'll be watching today is our vol M command. We'll talk about that here in just a few minutes, and we'll go over a chart from Friday. Now, for below transition, obviously we'd look for a little bit more weakness and pullback. Again, all of these are call-dominated confluence across SPXA and SPXP, and we'll be continuing to watch our market trend model for indications if there's buying versus selling. But as of now, in a call-dominated positive gamma environment, any of the pullbacks are an opportunity to get involved on the long side, unless we see a significant change in the overall market sentiment and structure. If we do, then obviously we would change our stance. Again, below 59.90, if we do see some weakness, we'd look for a pullback down towards the bottom of that IC leg, and most likely we'd see supportive type action down towards there. That would be the drunken sailor range. So again, we like to execute at key sensitivity levels or key gamma delta levels. So transition is one of those key levels. Top of the drunken sailor range is another of those key levels, and then the outlined PGEX as well as COI levels, and then the top of the IC level. So again, having all those key levels to execute at is extremely important. And we usually do a mechanical type trade of if-thens. If we move above transition or pull back to transition, That's a good area to get long within the overall market for a move back towards the top of the drunken sailor range. And then through the top of the drunken sailor range, we would target that key level of 60.20. If we do see some sort of rejection or failure, that may be an opportunity to short. But if we move through 60.20, then obviously we'd be long with decent size for a move up towards 60.40, 60.45. And that would be our profit target goal to look for some overall stalling. Once we get to that profit target goal, you can remove some of the position and maintain the rest of the position to keep a runner for an extension through that 60.40, 60.45 if we see out of the money call speculation come in via our vol M command. To the downside, if we move through the transition area to the bottom of transition area, we'd look for some more weakness and pull down towards the 60.70 or 59.70, 59.75, or the ultimate bottom of the IC leg there at 59.50 and 59.55. We would anticipate that to be a supportive area, an opportunity to go long. Obviously, the bottom of the drunken sailor range, a key level there that we'd like to execute off of. Again, this will all be prerequisite with the vol M command indicating that we see out of the money call speculation come in, and that we see out of the money put speculation starting to level out and drop or wane. If we do see a large out of the money put speculation come in via our vol M command, then obviously we'd be leaning a little bit more towards the bearish side and weakness if we did drop through that lower IC leg, which we're not really anticipating at the moment via our sentiment structure and trend. Again, intraday models can change, so we can overall change our bias and trading plan intraday depending on what is occurring at the moment via our tools intraday. So moving on, that's basically our trading plan for today. Moving on, the SPXP net stat command. This is our highest sensitivity levels for today. These are key levels that we'll continue to watch. So this is updated throughout the day and is spot price sensitive. So as spot price is moving, obviously some of these levels can change, but you see that 6,000 net delta level in the money calls below us. Again, those will continue to be supportive as the day grows. And that is a key area we've discussed multiple times here. And then we have the transition area just below that via our web app. And then to the upside, we've talked about the 60-20 level. That's out of the money call speculation. That would be our first area to watch, again, other than transition to move through. If we move through 60-20, we'd be looking for the top of the IC leg for a profit target goal. Again, supportive on any pullback, and then supportive on a move up as we're in the money calls and out of the money call dominated above and below spot price. Then you see our charm and net gamma levels, sensitivity levels. You see that 60-20 highest sensitivity level on net gamma. So that's why we're talking about, speaking about if we move through that 60-20, we could see a quick move to the upside via the overall gamma change through that key strike. And then net charm, we have out of the money puts. These will obviously continue to grow and be supportive throughout the day. And then the out of the money calls overhead will continue to be a headwind as time passes throughout the day at 60-40. And that's why we discussed that upper IC leg, as well as this high sensitivity charm level. That will most likely be an area that we see some stalling, and that where we would take some profit, and then we would look for an overall trade to move through the 60-40, or you see some sort of rejection or pullback around that 60-40, 60-50 IC leg. If you're a very quick and nimble trader, obviously directionally wise, you could trade either direction, or you could put on an overall structure within those IC legs or those key sensitivity levels and options trade that would take advantage of not moving above those key strikes to the upside. Again, we have multiple traders within our overall trading room that put on options structures that take advantage of these key levels also, if we're understanding or looking at that we're not going to move above those strikes. Moving on to our vol M command. This is obviously an intraday from Friday. You can see how the slopes continue to move throughout the day from the start of the day and to the finish of the day, just to get you orientated very quickly. The bolded green line is the call centroid. This is just the volume of calls that are being traded by market participants. Again, the centroid is basically the middle or the mass of overall contracts that are being traded. And the red obviously is the put centroid, the overall volume or center of the mass of puts that are being traded via market participants. And why we like to watch this is this gives us an indication of where market participants are positioning and speculating. Are they speculating to the upside? You would see the call centroid continue to trend above spot price, indicating that they're continuing to move that speculation up? Or is it trending to the downside, as in there's not a significant amount of out of the money call speculation occurring? And vice versa with the put centroid, is there a significant amount of out of the money put speculation occurring below spot price and strikes significantly below where we're at? Or is there really not that put speculation occurring and we're staying really close to spot price? The dotted lines are linear fit lines. This is just indicating if we continue on the same trajectory or slope, that could be our closing price. So we like to watch that as an overall slope, also indicating where, again, the overall mass of market participants and trend is occurring. And obviously you can see after we get past the 11 or 12 o'clock hour, we start to get a good idea of where a possible closing price, end of day overall price would be. Again, and then indicating this call centroid, if we're continuing to trend up and out of the money speculation is continuing strikes higher, then we would be looking for a trade directionally wise to the upside. Or if the put centroid obviously is trending down as well as the call centroid, we'd be looking for trades to the downside. So again, this runs throughout the day. We monitor the slopes, and obviously if they turn from negative to positive via the call or put centroids, that also gives us an indication of where the massive market participants are transacting the overall volume of contracts, and that gives us a good idea of the directionality wise that we should be going. If we see this crossed look, as we saw for most of the day on Friday, this is again indicating a consolidation type day. If we would see both of these centroids in a parallel fashion to the upside from lower left to upper right, this would give us an indication of an uptrending day, as well as the linear fit lines. And then if we see an overall negative slope of the centroids to the downside in a parallel type fashion, as well as the linear fit lines, this would give us an indication of a trend down day. So we really have, quickly, we have three states to view. The crossing or parallel line with not really much positive slope is a consolidation day. So that gives us an indication that we can put on butterflies or some other type of overall options structure to take advantage of a consolidation day. If we're trending to the upside, obviously on both of the slopes, then we would want to directionally be to the upside or put on some sort of option structure that would take advantage of price appreciation to the upside. And then obviously to the downside, if we're trending down, then you'd want to take advantage of the downside directionally wise, or with some option structure there. So again, this tool is invaluable intraday for us to get an overall idea of where market participants are positioning and how they are placing their bets. And then we can follow along with that intraday as we see changes in the overall slope, as well as the call and put centroids. All right, moving on to the trading view chart for this morning. Obviously, we've already laid out our if-thens for today of how we'll most likely be trading, indicating 6,000 obviously is an extremely important level. This is all expiries. This is our trading view overlay with our key gamma delta levels that we produce for our members every day. It's just a quick script that you can overlay. We have a 0DT script that is produced, as well as an all expiry script. So if you're not necessarily a 0DT trader, you're more of a swing or a position trader, then you can also use this script to help out with your trading plan. This updates in real time within our overall Discord, so you can just grab that script. Obviously, no reason to update it every 5 minutes or 15 minutes, however you wanted to do that. Basically, we tell our members you can update it in the morning, and then around the noon time to get the updated levels if you wish, and then into the afternoon if you also want to do that. That's obviously extremely based on what type of trading you're doing, and up to you how much data or information you want to consume or really change your charts. But the key sensitivity, the takeaway is that the key gamma delta levels really don't change that much. Obviously, spot price moving through those levels will change the sensitivity of them. But once you get an overall trading plan for the day, like we've laid out this morning via our web app, key transition areas, the key IC strikes, and then the overall drunken sailor range, which we could see some choppiness heading into today, then really not much is going to change throughout the day. So moving back to our SPXP 0DTE, again, going over that, key areas is 6,000, 60-20 to the upside, The top of the IC leg there at 60-40, 60-45. I've already laid that out. And then below the transition areas, the GEX and DEX confluence for a move down towards the lower IC area. So anyway, with that, hopefully that helps everybody. Thank you for joining us this morning for our pre-market prep. I know it was a little bit longer. We'll be shortening this, moving on further, roughly to about 15 minutes. Again, if anybody has any questions, they can post in the chat. I'll hang around for about another 5 minutes, and then we'll be posting this obviously on YouTube and X. Make sure you check out our Gamma Edge framework, all of our posts on X, gammaedge.us. For our website, free 14-day trial, all the tools turned on, come join us. We have a significant amount of education via our flagship education, which is our Gamma Edge framework, and just a significant amount of education for the option structure, options complex, learning about gamma and delta for the new trader. Make sure you check it out. It is all free, all of our education. And then our weekend newsletters are just stacked with a significant amount of education also for the new trader. So make sure you sign up for that. So thanks everybody for joining us this morning. Hang around for about another 5 minutes if anybody wants to throw anything in the chat on YouTube, but appreciate everyone joining us. Thanks everybody. Yeah, thanks, Tom. Appreciate it. AM, thank you. Appreciate it. Yeah, Zach, no problem. Yeah, you're welcome, Selena. No problem. Thank you. If anybody wants to see anything else laid out, yeah, no problem, Melanie. Appreciate you joining us. Yeah, if anybody has any other content they want to see us cover, obviously we can cover it in a newsletter. We can cover it via YouTube. I will look at Microsoft. We actually have a swing trading plan channel within our Discord where we cover all of the Mag 7 stocks, obviously the most liquid stocks. Give me 1 second. I can pull it up if you want here. So this will be our web app, and we can take a look at the overall sentiment and structure here. Give me 1 second. Okay. So this is our web app. Obviously, we punch in and return very quickly the overall sentiment structure. This is the all expiries turned on via our tiles over here. So this is obviously the full complex on out till 2027. So significant amount of expiries here. Call dominated above and below spot price is the quick takeaway. Key levels there, draw my eye to up here, COI 500. PGX 475, and then we have some other levels here, COTMC and COTMP, which won't really mean a lot to everybody at the moment unless you're within the Gamma Edge overall ecosystem. But again, call dominated above and below spot price, key levels on any pullback that should be supportive. I'll go ahead and look at the, let's just look at the June expiry here. I'll turn both of these on. So that gives us an idea of what's heading into the June expiry. So call dominated above and below spot price, transition here. We'd like to see price stay above transition. COI and PGX at 475. So that may be an area that may be difficult to overcome. I would say 480 would probably be maybe the top of that move to the upside. And then you see COTMC here. So COTMC is basically when out of the money calls go in the money. This is a high propensity area for monetization once those calls go in the money. So obviously that would be an area that I would look for spot price to most likely stall around there. But call dominated above and below spot price, any pullback, I would look to get involved in Microsoft. Call speculation, obviously up towards 500, 490 and 500. So call speculators are alive and well. You see this gradient here indicating that. Expected move 2.59% on these two expiries. So you over here, you would go to this chart and you'd say, okay, what's our expected move? Possible 2.59. So you're looking in between 480 and 4250. Which is kind of basically just where I was discussing that most likely you would see some stalling action. Pull back to the downside, pull back to 460 would still be very constructive, and even within this overall transition area, depending on what the overall market is looking like, and as well as Microsoft. Not sure when their earnings are, so you'd want to make sure you check that if you are heading into earnings season. But again, bullish, call dominated, and you pull back, I'd look to get involved. 480 most likely would probably put a cap on price at the moment. So what you'd want to see is you'd want to see this overall COI move up to 490 or 500, indicating more out of the money call speculation is coming in. So that would be an indication that spot price could advance even higher. So hopefully that helps. Yeah, we can take a look at Apple, Tom, real quick, and then I will end the stream. So we'll take a look at Apple. Obviously, all expiries turned on. Apple call dominated above and below spot price. COI is up at 230, which is indicating that call speculation, that's the highest call open interest. But expected move is 5%. So that would put you around 215. That's that peak X level on the overall structure there. So again, price appreciation up towards that level would most likely be where I would see maybe some sort of stalling. But again, you see all this out of the money call speculation above on the web app. So yeah, call speculation alive and well. Call dominated, pullback looks good. Transition, we're within the overall transition, but not too concerning for Apple. Again, pullback areas I would look to get involved. Obviously 200. If it continues to stay supportive, that's that POI level too. So again, right up under price is a nice indication. Not a significant amount of downside speculation there. So that's just indicating that opportunistic put holders are just putting bets right under spot price for any pullback there. So 200 is a nice round level. I would think that would be supportive on any pullback, and then call dominated. So out of the money call speculation alive and well too. So, all right. Thanks everybody. Thanks for joining us. We'll continue to do these throughout the week. We appreciate your overall interaction and feedback. Let us know if there's any content or again, any topics you want covered, but that's it. Everybody have a great day.